Welcome to TalkTickers. Today, we're diving straight into AMD's latest earnings call, first quarter of 2025.
Yeah, definitely a lot to unpack here.
Absolutely. Our goal, as always, is to cut through the noise, get to the core insights, what really matters from this call.
Okay, so starting with the top line, AMD had a record Q1. Revenue hit $7.4 billion.
Wow, good.
Which is up 36% compared to last year. Definitely beat expectations.
And the bottom line, how did earnings look?
Also very strong. Earnings per share jumped 55%, landing at $0.96.
55%, nice.
Yeah, and gross margins look good too, expanding to 54%. That's up about 140 basis points year over year.
So more profitable on what they're selling.
Exactly. And looking forward, they're still calling for, strong double-digit revenue growth for the whole year, 2025.
Even with some headwinds, they mentioned.
Even with some headwinds, yeah. They seem pretty confident.
Okay, so a really strong start. Let's dig a bit deeper. What were the main engines driving this? Where did the growth really come from?
The data center segment. That was undeniably the star. Revenue there soared 57% year over year.
57. Oh.
Yeah, hit $3.7 billion.
Yeah.
And this wasn't just like marginal growth. It was significant adoption of their EPYC server CPUs.
Both the new ones and the older ones?
Right, both the 5th gen Turin and continued strong demand for the 4th gen.
Right.
We're talking major cloud players, Alibaba, AWS, Google, Oracle, Tencent, all expanding their EPYC use.
So the hyperscalers are definitely buying in.
They are. And what's really interesting is the enterprise side. Adoption there more than doubled.
Doubled. Wow.
Yeah. Wins in streaming, transportation, financials, social media. I mean, EPYC is now deployed in a really significant chunk of top companies across different industries.
So it's becoming pretty foundational infrastructure.
It really seems that way.
Right.
And the manufacturing for the 5th gen is underway at TSMC's Arizona fab, with shipments expected later this year. Next-gen Venice is also on track for 2026.
Keeping the pipeline full. What about AI within the data center, the Instinct GPUs?
Huge growth there, too. Significant double-digit percentage growth, fueled by shipments of the MI325X and just generally increasing use for AI workloads, generative AI, search recommendations.
The stuff everyone's talking about?
Exactly.
Okay, so data center clearly firing on all cylinders. What about the parts closer to us consumers, client and gaming?
So that segment, client and gaming combined, grew 28% year over year, totaled $2.9 billion.
Still pretty healthy growth.
Very healthy. But the real driver there was the client-side PCs, laptops. That was up an impressive 68%.
68%? How?
Mostly driven by record average selling prices, ASPs, for their Ryzen chips. They're selling a richer mix, more high-end processors for desktops and mobiles.
So higher prices are boosting revenue significantly.
Exactly. Desktop channel sellout was up over 50%. Mobile Ryzen AI processor sales also jumped quite a bit. And commercial PC demand, business PCs, that was strong too, up over 30%.
Okay, so the PC market, at least for AMD, seems pretty robust, especially at the high end.
It does. Gaming, though, was a bit of a different story. That declined 30% year over year.
Ouch. Why the drop?
Mainly lower semi-custom sales. That's the chips going into like the Xbox and PlayStation consoles.
Right. The console cycle may be slowing a bit.
Potentially. But they did say console inventories have kind of normalized now, and they expect demand to strengthen through 2025. And it wasn't all bad news for gaming.
Oh.
Radeon graphics sales were actually higher, which offset some of that semi-custom decline. And their new top-end card, the Radeon 9070 series, had a record first week sellout. 10 times better than any previous Radeon launch.
Wow, okay. So demand for high-end PC gaming graphics is still intense.
Seems like it. And they mentioned FSR4, their new AI-based rendering tech, getting it adopted in more games.
Interesting dynamic there. Strong PC, softer console, but optimism.
Okay, what about the often overlooked embedded segment?
Yeah, embedded saw a small dip. Revenue down about 3% year over year, came in at $823 million.
Just a slight decrease then. Right. And they're saying demand is sort of gradually recovering. They expect things to look better in areas like test and measurement, communications, aerospace, mostly in the second half of 2025.
So a recovery play later in the year.
That seems to be the expectation. They also started shipping some new chips. They're cost-optimized FPGAs, second-gen Versal AI edge socks for AI outside the data center.
Right. AI at the edge.
And new EPYC embedded CPUs, too, which are already being used by Cisco and IBM in their gear.
Okay, so not the fireworks of data center, but sounds like it's stabilizing and maybe set for a comeback. Let's pivot to the outlook. What are they forecasting for Q2 and beyond?
So for Q2, the current quarter, They're guiding revenue to be approximately $7.4 billion again, plus or minus $300 million.
Okay, so similar to Q1 revenue.
Similar headline number, yes. But, and this is important, that includes an estimated $700 million revenue hit because of new export license rules.
The China export restrictions we've heard about affecting AI chips.
Exactly. Specifically, the MI308 shipments to China. So without that hit, the underlying forecast would actually be higher.
Got it. How does that break down by segment for Q2?
Sequentially, they expect client and gaming to increase by a double-digit percentage. Embedded should be flattish, but data center is expected to decrease because of that MI308 exclusion.
Makes sense if you're pulling out $700 million from that segment. What about margins for Q2?
Non-GAAP gross margin is forecasted about 43%, but that includes a big charge, around $800 million, for inventory reserves and related things.
Okay, a one-off charge.
Seems like it. If you exclude that charge, the underlying non-GAAP gross margin would be around 54%, so basically holding steady with Q1's underlying rate.
Right. So that export restriction clearly bites in the near term, especially for data center GPUs. How does that impact the full year picture? Are they still optimistic?
They are. Despite that headwind, they're sticking to their guns on strong double-digit revenue growth for the full year 2025. The midpoint of their guidance implies about 27% growth year over year for the whole year. They estimate the total hit from the export license thing for the full year will be around $1.5 billion.
Still a significant number, but they expect to overcome it overall.
Seems so. They're still confident about gaining market share in client processors, PCs and laptops. They also expect the semi-custom, the console chip business, to grow for the full year and for embedded to get back to year-over-year growth in the second half.
So still aiming high despite the specific China GPU issue. Beyond the raw numbers, what were some of the key discussion points or strategic things management emphasized on the call?
Well, a big theme was just sort of strong execution. They highlighted their product portfolio strength driving Q1 despite, macro uncertainties out there.
We feel they're executing well.
Yeah. And a lot of focus on AI, specifically the ramp of the next-gen MI350 series accelerators in the second half of this year.
The successor to the MI300?
Exactly. They mentioned strong customer interest, a key partnership with Oracle. This MI350, based on the new CDNA 4 architecture, is expected to be a really significant performance jump over the current MI300X.
So betting big on the next wave of AI chips.
Absolutely. And they said the MI400 series development is on track for next year too, aiming for leadership in both training and inference.
Keeping the roadmap aggressive.
Another interesting point was the acquisition of ZT Systems.
Yes, I saw that. What's the strategy there?
The idea is to offer ready-to-go rack-level AI solutions. Basically make it faster for hyperscalers and others to deploy AMD's AI hardware, speeding up time to market.
So moving beyond just selling chips to selling more complete systems.
Seems to be the direction. They also briefly mentioned working with the government on, AI diffusion rules, the export controls, and noted inventory levels are up.
Why is that?
They said it's to support the strong client and server ramps, and also to get ready for that big data center GPU ramp they expect in the second half.
Makes sense, preparing for demand. Anything else stand out?
Just reinforcing the strong client performance was driven by that high-end mix, ASP increases, and confidence in continuing to take server CPU share in the enterprise market. They feel their products are strong there.
Okay. It sounds like AI is really central to their strategy moving forward, from chips to full systems.
Undeniably. They believe they have the pieces needed, including networking and these rack-scale solutions now.
So putting it all together, what's the takeaway for someone watching AMD? What's the investor context here?
Well, the strong Q1 and the positive full-year outlook, even with the China headwinds, suggest AMD is capitalizing effectively on data center and AI demand. That's pretty clear.
Right.
The growth in client, especially high-end client, shows their product strategy there is working. They're gaining share. Now, that China export control impact, especially on data center GPUs, is definitely something to watch closely. It's a real headwind.
But they think they can grow despite it.
They do. They're banking on growth in other markets and the ramp of these new products like the MI350. The ZT Systems acquisition also signals that strategic shift towards more integrated AI solutions, hardware and software.
And the margins.
The underlying gross margin improvement, excluding that one-time charge, really reflects that shift towards higher value data center and premium client products driving profitability.
Okay, makes sense. Right, let's switch gears a bit. Time for our This Is Not Financial Advice segment. Thinking about these results, Any outrageous but plausible trade ideas spring to mind?
Okay. Outrageous but plausible idea number one. Given the record launch they mentioned for the high-end Radeon 9070 and just the general strength in high-end PC gaming, what if you took a speculative long position in companies that make high-end gaming peripherals, keyboards, mice, headsets, that kind of thing?
Interesting. The idea being if people are buying expensive AMD graphics cards,
they might also splurge on the accessories to go with them, especially if AMD keeps that momentum going. It's definitely speculative, depends on AMD's continued success, and no major supply issues.
Okay, that's one. Got another.
Idea number two, focusing on the data center AI ramp, the MI350, that Oracle partnership.
Yay.
Building out all that AI infrastructure takes a ton of power, really dense power requirements. So maybe a short-term, long position and like a niche power management company that specializes in those high-density data center power solutions.
So betting on the infrastructure build-out around the AI chips.
Exactly. If AMD's AI plans really take off later this year like they project, the demand for specialized power components could see a surprise boost. Highly speculative, obviously. Hinges completely on AMD executing and that demand actually materializing.
Definitely outrageous, but plausible. Okay, great stuff. So wrapping up our deep dive on AMD's Q1 earnings.
Yeah. I mean, the takeaway is robust growth, especially data center and client. They're navigating headwinds, particularly the China export rules.
But remain optimistic about strong double-digit growth for the year, driven by new products and market share gains.
And that strategic focus on AI, hardware, software, full solutions. It seems clear that's where they see the long-term future.
Absolutely. Now remember, this was just our summary. There's always more detail in the full call materials, so do your own research.
So what are your thoughts? Is AMD's AI strategy hitting the mark? Will the MI350 really move the needle against the competition?
We'd love to hear what stood out to you. Join the conversation. Thanks for tuning in to TalkTickers.
We'll catch you next time for another earnings breakdown.